One of the key things, we're going to talk a little bit about how you can differentiate yourself. One of the key things in differentiating yourself is providing education and information to your clients. That's where you're going to have to go if you're going to be relevant.
Welcome to PowerHouse, where we interview the biggest names in housing and ask them about their strategy for growth. I'm Diego Sanchez, president of HousingWire, and my guest today is a special one. It's Patrick Stone, the chairman and founder of Williston Financial Group. Patrick, it's so great to have you on the show.
My pleasure. Thanks for having me, Diego.
So you've been in housing for multiple cycles and administration changes. What are the biggest changes from your perspective that the housing industry has seen? And also from your perspective, what hasn't changed at all in the real estate transaction?
Well, I think the biggest changes were really a byproduct of two major events. The first one that I witnessed was the S&L crisis in the early 80s. And basically, the bulk of loans back then was done by savings and loan institutions. Between 1981 and 1983, about 1,000 of them went under. And so consequently, for a period of time there, it was difficult to get a loan because there was no place to get a loan. Plus, interest rates went through the roof. I've been at this 50 years. My first management job, the day I took over a company, mortgage rates were 15%, which is a little intimidating. They got up as high as 18%. The GSEs started getting more involved in buying loans, and it got, the market stabilized and rates came down with Volcker's efforts to curtail interest rates. So we got through it, but it was dramatic and it was impactful and it changed the industry significantly. The other major event, of course, is the financial crisis, which I think everybody remembers too well because it wasn't that long ago. And really, that was a byproduct. People blame real estate. I personally blame Wall Street because they bought subprime loans in order to raise returns on by securitizing mortgages and throwing in some subprime loans to get the return rate up. Well, it got to the point where a lot of securitized efforts had 10, 15% subprime loans in it. And of course, when the market crashed, that went upside down and you had a mammoth foreclosure wave. And then we've had some regulatory adjustments, so we don't have that issue anymore. Right now, the biggest issue that I see is that we have very little coordination between regulators and a lot of talk about saving money, but no one quite knows how to do it.
Yeah, and if you look at the real estate transaction, despite billions of dollars being spent on disruption in real estate, it still comes down to a real estate agent working with a loan originator, working with an appraiser, working with a title agent at the end of the process. That hasn't changed very much, has it?
It hasn't changed at all. And, I applaud your use of the word disruption, but I haven't seen any in the real estate industry. It hasn't changed very much at all in my 50 years. And I do think that is because you have different regulators overseeing each aspect of it with no internal coordination or no efforts to actually work together. That has to change. If FHFA is really serious about reducing cost, then they need to take some time out of the process. They also need to make the process more efficient. It's a horribly inefficient process for almost everyone involved, in part because there's no coordination between the realtors, lenders, and title companies and appraisers, if you will. We have a tremendous duplication of data. We don't align our processes to make it more efficient. When I started in this business, it took an average of about 45 days to close a real estate deal. Now it's down to 39 after about $100 billion worth of tech improvements across the industry. It really has not changed very much. In some places, it's still much higher than that. So I think it's really the separate regulatory oversight that creates a problem. We still do not have the level of interaction, integration, and mutual effort among the players to make the process more efficient.
what if you had a magic wand and you could wave that magic wand and fix some of these regulatory issues and confusion at the regulatory level? What would you do to make changes?
Well, I think first of all, the little we need to change some of the rules so we can share data, have a common data vault, common data source, and use that. So we don't rekey data on every transaction 50 million times, right? I do think the getting regulatory interaction is going to be difficult, but I do think the associations, the ALTA for the title industry, MBA for the mortgage industry, NAR, even though that they've had some disruption, NAR for the real estate industry. I do think if the associations put a coordinated work group together, they could make recommendations to the regulators that would have a significant difference and, maybe encourage a little bit more coordination of the efforts. I mean, here we are, this huge industry, and it is still as disparate and as dysfunctional as it was when I started 50 years ago because we're regulated by different entities. And the title insurance industry, because it's an insurance industry, is regulated state by state. Then underlying that, and I'm ranting a little bit here, forgive me, but underlying that, you have different quality data in different places. You have different business practices. It is a really convoluted industry at this point in time.
So we talk a lot about margin compression and reducing costs, but some savings come from reducing the time that is spent on task.
Yes.
From your perspective, what would it take to reduce the time to close, and how would that impact affordability and access to home ownership?
Well, I think, reducing time would really be a function of aligning the processes and sharing the data. The processes aren't aligned. I mean, we do not sit down with lenders and realtors and figure out what we can all do to make it like a linear process. So I think aligning the processes would help. Sharing the data would help. But if we could get the average closing time from 39 down to even 21, that would be mammoth. But more importantly, what would happen is you'd have a lot less fallout. You'd have a lot less canceled transactions if you reduce the time. And that is a tremendous expense for everybody, right? And we factor that into our fees because we do a lot of work that doesn't actually close or generate revenue. So if you reduce the time, I think the biggest impact would be a drop in the amount of canceled transactions. And that as a result of that, you would save a tremendous amount of money. Do I see the costs coming down? No, I'm not overly optimistic about that, but I do think we could increase the efficiency and eliminate the need for the costs to go up.
Absolutely. And you've talked about this in this conversation previously, but let's dive in a little bit. Leaders in different verticals of housing often have a limited understanding of one another's processes. How can our industry foster better communication and collaboration across real estate, mortgage, valuation, and the closing process?
Well, and I don't mean to come across as being cynical here. I don't think that's going to come from the regulatory side. If that's going to happen, that's going to be a result of the various associations working together to try to figure out how to do that, how to make the process more linear and not repetitive. If we can eliminate rekeying of data, if we can make the process linear so that every time you do something, it's a logical next step in the whole process, we could take a lot of time and cost out and consequently reduce the amount of cancellations and improve the experience for everyone. If you get right down to the nuts and bolts of it, I think educating through some cooperation among the associations, identifying opportunities by cooperation between the associations. That's what it's going to take. There's going to have to be some outreach there where the different associations put people together and really work on this diligently in order for it to have credibility. I've been, not to rant, but I've been involved in a few efforts to do this from a capitalistic point of view, like, okay, let's invent a new product here and charge for it. But it's really hard to get adoption from all the players if the initiative is coming from one of the participants that's a competitor. So I think it's going to require the associations to get more engaged.
So I'm Gen X, and my generation, millennials and Gen Z, have entered and are entering the housing market with really different expectations in terms of process and speed and customer service. How do you see, my generation's demands and then the generations after mine? How do you see those demands reshaping the housing industry?
Well, here's an interesting thing, and I think there's been a lot of conversations and concerns over the younger generations requiring more automation, and that will occur. But I will tell you this: that right now, that's manifesting itself by people using the internet and online access to find properties more so than the transaction. I think once they go through a transaction one time, the second time they buy a home, they're going to want to do a lot more of it on an automated basis. So this hasn't had an overall impact as quickly as I originally thought, but it has had an impact on finding a property. And I think the next cycle, the next time that individual or those individuals buy a home, they will expect a heck of a lot more integration and automation in the process.
We talked earlier in the conversation about the real estate transaction not changing that much. It's still all about the real estate agent, the LO, the appraiser, and the title agent. And it also turns out that my generation, millennials and Gen Z, want to work with local experts.
Yeah, and it's one of the key things. I mean, we're going to talk a little bit about how you can differentiate yourself. One of the key things in differentiating yourself is providing education and information to your clients. And, I think you're absolutely right. Younger generations are more attuned to that. They're more demanding and they expect it. So that's where you're going to have to go if you're going to be relevant.
So you just brought this up. And so it leads right into my next question, which is mortgage lending, title, real estate brokerages can be perceived as a little bit of commodity businesses, right? Where consumers don't see a lot of differentiation between the different competitors in those verticals. What do you think business leaders, brokerage leaders, mortgage lending leaders, title company leadership, what do you think they need to do to really differentiate themselves from their competition?
Well, my own experience, and I think it's relevant to the question, is that you need to provide education to people. You need to make sure they understand what is happening, when, why it's happening, and what happens next. And so if you can status your clients, and you can do this online. We have a My Home product that does this, and it's gotten really, really good usage. People can sign up and they get status during the transaction 14 times. So they know what's going on. And I'm going to, if I may, I'm just going to share a quick story with you here. I invented copper wire fighting over pennies. So I'm pretty tight sometimes. And I got real excited about the idea we're going to status people 14 times automatically out of the closing system without any individual effort or interaction. So in other words, this doesn't take any time or effort on our people's part. And I got all excited about the time and money it was going to save us. What I missed was people come to the closing understanding what happened. They didn't feel like they were in the dark the whole time, and they're happy. They come in with a smile on their face. The realtor and lender get a referral. Holy cow, is that okay? Yeah, that's okay. That works pretty well. So I think to your point, and to kind of where a couple questions went here, if we let people know what's going on, we can use the online capability to status people, keep them informed, keep them educated, and that's critical. So statusing and education. And then the other thing I would recommend everybody do is have some sort of professional feedback on your service. Okay, we do an NPS score at our company, and I'm going to share something with you. Yeah, you want to know you want to know if you're doing a good job or not. Of course, you want to market the idea that you're doing great. But here's the interesting thing. We started doing this NPS score. We shared it with our people in a non-judgmental way. That NPS score has gone up dramatically because people take pride in what they do. And if they get feedback, they try to improve on it. So your employees will self-regulate to a large degree in the quality of work they do if they have a feedback loop, an independent assessment of how good the quality was, someone that interviews the clients. This is really critical to improving the quality of your service.
Yeah, and your answer is so on point, especially with first-time home buyers, where, if you surprise and delight a first-time home buyer during the transaction by keeping them informed and by educating them throughout the process, wow, you're probably going to get a lot of referrals from that.
Yeah, I mean, it's had a dramatic impact on our business, and it's had a dramatic impact on our employees' pride and feeling of success. Our employees take a great deal of pride in that score and in fact that it's going up, right? I mean, it's self-motivating, and but it's good for management to know, how you're doing, but it's really great for the employees to have a feedback loop like that.
So you're very experienced in this industry. You've been working as an executive for a long time. If you could set one priority for the housing industry over the next 5 years to improve efficiency and expand access to home ownership, what would that big priority be?
I think working on aligning our processes so that we share the data. One of the things that we are very focused on doing is getting and with our clients enacting a data vault, so we share the data. I did a survey. This is it's a little out of date. Forgive me. It's probably 20 years old now, or 22 years old to be precise, about how many times name and address were entered in a typical real estate transaction by all the participants. At that time, it was over 80 times, and that's just ridiculous, right? So if we can share data, the time and effort spent in rekeying data goes down, the amount of errors goes down. And if we can focus then on interactive processes so that we align our processes and don't do, if you do one thing and then you have to go back and go forward, go back, go forward, which really happens a lot in all the players. If you could align the processes, it would be complementary and you wouldn't have repetitive processes. You could take a significant amount of time out of it. And I think the other thing here that's going to make it happen is not going to come from the regulators. It's going to have to come from the associations. Our associations need to get together. There's very little interaction among the industry associations, and that's a shame because we're all in the same business together, right? We're all working for the same purpose. We all get paid when a transaction closes. So we need to align our processes, and I think that's going to take some effort by the associations to identify it. To make sure that we share data, that we align our processes and operate more efficiently. Again, taking time saves us money, but what it really does is it cuts down on the fallout. At any given time, you'll see different numbers, anywhere from 30 to 40% of the transactions don't close, right? I mean, what kind of industry, after all this time and all this money spent on automation, what kind of industry has a 30 or 40% fallout? The real estate industry is, and this is stupid and it's expensive and it needs to be addressed. Sorry, I'm ranting.
You mentioned you mentioned that survey that you did over 20 years ago, but I bet it hasn't changed very much in terms of people having to key in the same data over and over in the process.
It may have changed a little bit, but not a lot. Right? I mean, every participant, whether you're a realtor, a lender, an appraiser, an inspector, a title company, whoever, everybody, goes about entering all the data themselves. And the rekeying of data. The rekeying of data is mammoth.
Well, Pat Stone, what a pleasure chatting with you today. You just have a wealth of experience and knowledge about the housing industry. Thank you so much for joining me on PowerHouse.
Diego, thank you for having me. Delighted to participate. And I think we all want the same thing. We want a more efficient process, a higher closing percentage, and a more satisfied clientele. So we're all in this together.
Cheers to that.